Well, good afternoon, and thank you all for coming. My name is Matthew Rees. We'll be discussing Islamic finance today, and I will be I'll be playing the role of the moderator. My very imprecise gauge for this topic and how it's changed is that when I came to this conference in 2009, the Islamic finance panel discussion was held at 6:30 in the morning. So we've made some progress on that front, and we'll hope that this year's discussion helps to ensure that the panel in future years is held after sunrise. So this is a very important subject, as all of you know, and it's only getting more important, if for no other reason than demographics. A recent study by the Pew Center here in the United States forecasts that the Islamic population projects that by 2050 that the Islamic population will be 30% of the global population, up from 23% today. And the current state of affairs, of course, is that a significant share of the Islamic population is underbanked, and so there's considerable opportunity. So for this afternoon, one of the things we'll be discussing is how the Islamic finance industry can evolve to serve this growing populace, and we have a distinguished group of panelists who I will be calling on, and perhaps all of you as well, with questions. On my far left is Sean Marion, a managing director in the Financial Institutions Group at Moody's in London. On my immediate left is Sharon Makhzani, executive director in the Malaysian government's Strategic Investment Fund. And on my right is Mohammed Ahmed Al-Khaja, head of asset management at Osul Asset Management in Bahrain, and previously with Credit Suisse, Merrill Lynch, and HSBC. We thought that there would be some value in perhaps just highlighting some of the key principles of Islamic finance to help guide the discussion. Sean kindly volunteered to touch on some of those principles, and then I can go into some more specific questions. So, Sean, the floor is yours.
Okay, so I think there's a whole series of sort of elements or principles that underpin Islamic finance and ensure that products are Sharia compliant. But I think, if we look at sort of the core principles, we can just sort of focus on three, and then I'll sort of help frame for those of you that may not be familiar with the sector in terms of what governs Islamic finance. I think there are three core principles. The first is prohibition on interest. Second is an emphasis or focus on tangible investments. And the third being risk sharing. So if we take the first one, so prohibition on interest. So what does that mean? Well, technically it means you cannot make money solely off of money. So this obviously puts a ban on what we consider traditional lending. The second element, and what would be linked to that as well, is there's also a prohibition on gambling and what you could kind of call speculating on uncertainty. So let's consider that sort of the first tenet, the first principle. Second, we look at sort of focus on tangible investment. So what does that mean? Well, it means that there has to be a tangible, a physical asset in the mix when there is a transaction that would be akin to lending. And that ties into the third element, but it's quite linked in risk sharing. So you've got a physical asset there, and as well, there's a bit of a concept of you share in both the upside and the downside. So there's a bit of an equity. I didn't realize we had a slide up there, but it's I think these are sort of the three overarching concepts. I think that sort of come up again whether we look at Islamic finance banks, we look at sukuk issuances, which are the Islamic equivalent of bonds, look at takaful insurance, or look at Islamic funds.
Good. Thank you. Sharon, you're based in Malaysia, which is often viewed as the hub of the global finance industry. The government has created as you were describing to me earlier, a very favorable environment that's supported the growth of Islamic finance in Malaysia. Can you talk a little bit about that and how Islamic finance has evolved in Malaysia, but also highlight what you think some of the common misconceptions are about Islamic finance that may have handicapped its growth?
Okay, thank you. Could we have slide 1 up, please? I come from Malaysia. Malaysia is a country in Southeast Asia, and which has a fairly large Muslim population. About just over 60% of the population is Muslim. And we, as a country, we've tried to develop Islamic finance. We started legislation in the 80s. The first Islamic debt was issued in the early 90s by Shell, a multinational. In the mid-60s, we probably set up what was probably the first modern Islamic bank, which is the Pilgrimage Fund, which collected money from individuals so that they could save up enough money to go on the Hajj. So we've as a country, we've tried very hard. I think if you look at that chart, you can see that in terms of Islamic assets, Malaysia is pretty high. I mean, just under Saudi Arabia in terms of Islamic assets. So, there are many ways to view Islamic finance, and I'll take it in the way in which we used to sell it to the issuers. Before this, I used to run investment banking for CIMB, which is, which for a long time was the #1 issuer of Sukuk globally. And if you're looking at as an issuer or as someone who wants to raise financing, how we used to tell it to our clients is that it at the very least gives you a more diversified investor base. So if before you only appeal to one set of investors, if you were to issue an Islamic instrument, you can appeal to another class of investor, the Islamic investor. And that was always very good. So in Malaysia, for example, the Islamic finance is so well accepted that you actually get your cost of capital is lower if you issue Islamic papers, because you have that wide investor base, and so more people, you have more investors bidding to invest in your company. From an investor point of view, obviously some people are driven for religious reasons to invest in Islamic finance, but it also appeals to the ethical investor, because one thing an issuer can't be doing is he can't be doing gaming, he can't be doing alcohol, and he can't be doing other unpermitted Islamic activities. So again, from ethical fund point of view, a lot of people invest in Islamic finance simply because of the quality or the nature of the issuer. Those who invested in Islamic equity unit trust did very well over the crisis period, because of course Islamic unit trusts don't hold any banks. So if you didn't hold any banks during 08, 09, you did very well indeed. So if you look at the Islamic equity instruments, they did very well during that period. So in that sense, there's a lot to say from Islamic finance. But you could also take the argument one step further, which is you could view it as a radical way of reshaping the financial architecture. Because as was explained just now, the hallmark of Islamic finance, and sorry, I shouldn't say this categorically, because not all Islamic economists would agree with this, or Islamic bankers would agree with this. But one way of putting it is that if you don't allow credit, if you don't allow interest, that means you can only have equity-based financing. Now, perhaps the ills of the world would have been solved if we only had equity-based financing, because if you look at the crisis, most economic crises are caused by a debt crisis. If you had no debt, then perhaps there would be no economic crisis. But in any event, you wouldn't have that transmission mechanism which you have in the financial system at the moment, because if one debt falls over, he borrows, and the kind of shocks move along the system. But if you had a totally equity-based system, then they would end there. There would be a circuit breaker. There would be a kind of built-in circuit breaker for the system. So that's a more radical way of looking at it. And of course now, since everybody is issuing negative yield debt in Europe, perhaps this is the best chance we'll ever have of putting Islamic finance in place, because interest doesn't exist anymore, realistically. And so if you want to ban interest, now's the time to do it. And my final point is again, maybe a more moralistic point, which is that most major religions ban usury. Actually, all major religions ban usury. Even Confucianism bans usury. I think Dante put usurers in the 7th circle of hell, along with blasphemers and sodomites. So, but somewhere along the line, as the modern financial system evolved, charging interest became acceptable. But there was a time when it was seen by all cultures and all religions, and perhaps, again, investing in Islamic finance could give you that kind of return as well.
Sean,
I mean, one of the big misconceptions, though, about Islamic finance kind of comes back to this idea, because there's a little bit of an issue of form over substance when you look at Islamic finance, and you look at sort of the sukuk market. And this is something that often trips up investors from the buy side, coming from sort of conventional funds, is they look at these transactions and they think, are these securitizations? Are these asset backed? Whereas nominally they are, but in reality they aren't. And they can be, but the lion's share of transactions out there, they're structured in such a way that there's a nominal transfer of the assets. So you're earning income streams off of those assets. However, at the end of the day, despite the complexity and the legal setup, it's equivalent to a senior unsecured bond. It ranks pari passu with a senior unsecured bond. And ultimately, as an investor, you have a claim against that corporate, against that sovereign. So there's a lot of complexities in there, but you need to also sort of put things in context that it's not necessarily as radical as it could be. There are asset-backed transactions, full securitizations, which would, both in form and substance speak to these issues, but in many cases there aren't. So I just wanted to put that out there because it's a...
Well, and so as I was, the most sort of fundamental description I read of this was if you're going to, if you want to buy a car and the car is $10,000, the bank, instead of just making you a loan and charging you interest, would actually buy the car, correct? And then you might pay the bank $11,000 for the car that it bought for $10,000 at the most fundamental level, right? Is that so? Mohammed, you're based in Bahrain, which has also become a center for, among other things, Islamic standard setting, and you're affiliated you're on the board of an Islamic bank as well. Can you talk a little bit about the environment in Bahrain and perhaps build on some of what we've already talked about?
Sure, absolutely. Bahrain was probably a pioneer country in supporting Islamic banking. If you look at it from every aspect, it was the first country where the central bank issues a separate set of legislation governing the Islamic banks versus non-Islamic banks, which is not even today not in existence in many other countries. Furthermore, even as a central bank, it was the first central bank to issue an actual sukuk in 2001. Not obviously the corporate, I'm talking the central bank itself. Furthermore, obviously talking about how the entire world look at Bahrain as a center for Islamic banking. You have Deutsche Bank, Deloitte having their Islamic Excellence Center in Bahrain. You have Thomson Reuters having their center in Bahrain. And you have probably one of the highest concentration of Islamic financial institutions in Bahrain, 32, between the Islamic banks, Takaf and Takaf institutions. So the government have always been supporting Islamic banks and the development of the whole sector. Obviously, when we talk about Islamic sectors, not only Islamic banks, we talk about obviously Takaf and other areas where the governments are trying to push for. Furthermore, obviously, I forgot to touch base on the IOFI, which is the equivalent or the Islamic standard one of the Islamic standard setting bodies, which is based out of Bahrain. So the government have always been supportive. They've always aimed to be the center for Islamic banking, at least in the, let's say, in the GCC area. There's always a clear distinction between the GCC versus Asia in terms of school of thoughts, etc. So Malaysia is obviously an undeniable center for Islamic banking, but if we look at it from our side, it's Bahrain who have been always the center for that. If I touch just on a couple of points where my colleagues have mentioned, so which is a very important topic, what Sean said is the asset-based versus the asset-backed, which many investors fail to probably recognize, and the legal consequences of that, which is an area of concern, more so after the financial crisis and some of the issues regionally which unfolded, and people try to look for the consequences of obviously somebody defaulting, and that was probably the first time where people seriously have looked at that. Finally, before I just give it back to you, I think, in the sense of Islamic banking, is the opposite of everything we're saying. So the laws obviously try to, the 3 points that Sean mentioned, not making money over money, not speculating, etc. But at the same time, it's pushing investors not to be lazy. It's punishing lazy money, because if you couple that with some of the sort of Islamic taxes in the forms of zakah, the Sharia laws punishes lazy money and pushes investors to actually trade and participate in the economy itself. So that's a fundamental, obviously, point to look at, and why Islamic banking looks the way it looks.
So, so one of the issues that we wanted to touch on are some of the obstacles to the continued growth of Islamic finance. There's the issue of the fact that regulation is not harmonized, and then there's the issue of just talent development, human capital, and whether are there enough people with knowledge of the industry who are entering the industry. Can any of you touch on some of those themes in terms of just the obstacles? Maybe Sean, do you want to start on that?
Sure. I mean, maybe I'd actually start with another obstacle, just something maybe more interest to those in the room. I think one of the reasons why Sukuk is getting more and more popular is that for corporates that are looking to issue Sukuk, there's a real premium they pay the first time around. There's sort of these high sunk costs to get the legal structures correct, get all the documentation, ensure that they're Sharia compliant. They've got a board that speaks to that. They bring an Islamic scholar, etc. But once they do that, they're getting yields on those. They're issuing at a price that is lower than they would get with issuing, conventional fixed income. So one of the obstacles is now there's such a demand out there, coming from Islamic funds, coming from Islamic banks, continues to outstrip demand. So I think one of the obstacles is the yields. Yields are consistently lower. I mean, there's exceptions, but broadly speaking, lower than you'd see in their benchmark sort of conventional equivalents. So that's one thing I think's an obstacle, because to get conventional fund investors in to see these as an asset class that's truly global, something that they can view when they're looking at a specific market, they want to get exposure to a specific institution. To have that equivalent, we need to get the yields on par. And so I think that's not going to happen until issuance comes up. And even though we're projecting significant growth, that sort of tipping point is not going to come for a while. And so I think that's one thing that's going to keep it. It's going to be an obstacle to having it as an asset class that is universally acceptable, where there's a real global appetite, and we're not quite there yet.
I think just look what Hong Kong and London have done. I mean, they're both, they're both financial centers, one in Asia, one in Europe, and they've both decided that they want to promote Islamic banking and get some of the Islamic finance activity happening in their jurisdiction. So, Hong Kong last year issued a $1 billion sukuk. Britain issued a 200 million pound sukuk. And the idea about that is that, as he was saying, is that it's very expensive for a corporate to go through that learning process to get around the regulatory hurdles and everything else. So if the government wants to promote it, what the government does is the government becomes the first issuer, because the government, it takes the credit risk out of the whole equation, because everybody knows, Hong Kong government and the British government are good for 200 million pounds or $1 billion. But what it does help is that everybody, you can talk all you like about trying to set up Islamic finance in your country, but until you actually work through doing one issuance, you then find out there's a little regulation somewhere which no one ever thought about. There's some tax law somewhere which no one ever thought about. So then by doing that, and you've then proven, you've done your pilot, you've done your test case, and you've proved the concept, and hopefully more issuers will follow. But as it turns out, I don't think any issuances have followed in the UK, but I'm sure, but the stage has been set to do that, and I think that's the way to do it. Because one of the things we have to do is to get what's called tax neutrality. Because as was said earlier, Islamic finance is asset-based, and if you're moving assets around in some countries, that there's a lot of tax cost to moving assets around, a stamp duty or transaction tax. So to get tax neutrality, you've got to give it tax exemption so that it's no more expensive in tax terms to issue a Islamic finance instrument than it is to issue a conventional instrument. And again, the things which they did in Britain and Hong Kong were to just work through all these wrinkles to make sure that that these things can be done. So there is a lot of work going on around the world to get Islamic finance going. And the irony is that although it started in Malaysia and it started in the GCC countries, there is a risk that the major global financial centers will become also major global Islamic financial centers simply because they are, global financial centers, and if they get onto it, then there is a risk that all the good work done in the Middle East and Malaysia will be all for the sake of the City of London. But there we are.
Mohammed, turning to the opportunities, we talked a little bit before about infrastructure finance as a potential vehicle or where Islamic financial capital can be deployed. Can you talk about some of what you've seen in Dubai and then also the opportunities in Asia, given the incredible infrastructure needs across Asia?
So talking about souk issues in Dubai, obviously Emirates Airline have been pioneering in terms of using sukuks to purchase their fleet. That's one of the main instruments they use to actually expand their fleets to the level they have at the moment. But going back to infrastructure, it's a very interesting sector for Islamic finance due to the characteristics. Infrastructure in the long run obviously have a very constant stream of income, which Islamic investors like. It is asset-based. Add to that, if we look at Asia in general and Africa, it's a geographical diversification for the typical Islamic investor. Most of the assets are really either in Malaysia or the GCC. So that's a way to expand the exposure of the investors away from Malaysia to the bigger Asia, and obviously Africa, which is a new geography for investors. And that's why looking at the way forward and how much infrastructure spent is needed by all governments globally, I believe that's going to be a huge growth area for Islamic finance.
So one of the very interesting dimensions of Islamic finance that I'd like to ask Sharon about is the role played by Islamic scholars and the need to have these scholars certify Islamic financial products. It's something that is, well, in some respects, obviously very different than conventional finance, and there are some challenges that are presented by it. Can you talk about some of those challenges and just maybe sort of introduce the topic and sort of the role played by these Islamic scholars and how the process works?
I don't know. To me, it's a bit like going to Skadden Arps to get a legal opinion to say that the bonds are legal, valid, and binding. I mean, it's the same. It's the same principle. You go, instead of going to a big law firm, you go to a panel of Islamic scholars, or another way of putting it, Islamic lawyers, who are well versed in Sharia law, who will then certify, who will then give an opinion that this complies with Islamic law. It's no more, no less than getting and no more, no less painful than getting an opinion from a big law firm.
Yeah, some of what's been written about is the fact that there's a relatively small collection of people who are experts who are in a position to certify these products. Is that again, and that the methodology? Yeah. I suppose you could say the same thing about the attorneys, but the methodology used by the Islamic scholars is it's opaque. It's not.
I would. I mean, in the same way, you could say that it's opaque how a legal opinion comes out of a big law firm. And again, there are many lawyers, but there's a monopoly on law firms which are used to certify big bond deals.
Right.
And in the same way, there are many Islamic scholars, but people tend to use the ones who are well known. I don't think there's any lack of qualified people to look at this. I don't think that's the big drawback.
Mohammed, yeah.
It's not. I believe there is a lack, but it's just due to the function of the growth of the industry. If you look at the industry, it has been growing at 15 to 20%, and they're expecting the industry to continue to grow at 15 to 20% at least until 2019. And even beyond that, the growth is going to be still very high, not 15 to 20, but still obviously in the double digit. So it's the chicken or the egg. Do you have the industry first, or do you have the scholars first? With the way the industry is developing, obviously more and more scholars are going to come online. But obviously this is not as simple as having a certain study and a certificate and you're accepted. You need obviously people who have enough experience accepted by the wider audience or the investors. So it will take some time to catch up. But again, I agree with a different angle. Is just trying to catch up with the growth that the industry was having, is having, and will continue to have for a while to come.
Are there common standards? I mean, sort of, we talked about sort of the harmonization of regulation. I mean, are there across among the Islamic scholars? I mean, I mean, how much of it is subject to interpretation, and how much of it is sort of fixed?
If I may add, don't forget that's a relatively new industry comparing it to conventional banking. So it's the understanding, the going through building blocks of putting the whole industry in place. So at the moment you might have different school of thoughts to a certain extent between, let's say, GCC and Malaysia. And then even within GCC you'll have stricter scholars, lesser stricter scholars. But if you look at the last 10 or 15 years, views have been converging over time. So you have Malaysian scholars who are based in Dubai, working in Saudi, and their views are widely accepted. I believe, yes, it might take a bit longer, but you do see the convergence in opinions and the way scholars think, or probably the fatwas that they issue.
Okay. Sean, you look at the global Islamic finance industry. Do you have, can you talk about some of the either countries or regions where you see the biggest growth opportunities, and maybe are there specific sectors within those countries where you see the biggest growth coming?
Okay, I think we've actually got a slide that speaks to that. If we just look at Sukuk, I think it's slide number 2, if I'm not mistaken. Because I think it's important to, first of all, to sort of put things in context, in that, you know, the drivers that we've seen pushing up Sukuk issuance, if you sort of go back over the last decade, I think those are going to be here to stay. So we think there's going to be continued growth, but there's a few key things that additionally are also pushing this up. So for 2015, this is Moody's estimate in terms of where we're forecasting Sukuk issuance. But there's others in the market I think is going to be a little bit stronger. We'll have to see how the year plays out, but it could go up to sort of about 150 billion. So again, we're starting from a relatively small base, but it's definitely growing. It's growing significantly. You know, we talked about last year sort of being a landmark year. Term was referenced earlier, looking at Hong Kong, looking at London, Luxembourg, South Africa, all of these countries issuing. Why are they issuing? You know, one is, yes, yield's attractive, but the key thing is they're setting a benchmark. Then they're looking for banks, they're looking for corporates to issue. You know, I think we're going to continue to see that. You know, Malaysia will continue to be a large issuer. Large portion of that's local currency, so you know it may not be of interest to international investors, but for those looking for exposure to that economy, to that currency, that's going to be big. Comes back to, for Malaysia as well, comes back to the infrastructure story. The government's got what they call the economic transformation program. I think over the next 5 years or so, you're looking about a program about 300 billion roughly. You know, there's going to be a lot of Sukuk issuance out of that. You go back to sort of the Gulf. Again, there's going to be public infrastructure spending. There's also another interesting dynamic that's emerging in the Gulf, is that, you know, we've seen oil prices obviously decline, having a direct impact on government revenues. And you look at sort of the Gulf banking systems across all the GCC countries, you know, it varies depending on the country, but sort of 10% and 30% of their deposits are sourced from either the government or government-related issuers. So what are you seeing? And we're already seeing this in recent months. We're seeing a slowdown in the accumulation of those, and some of those actually being sucked back in because there's a fiscal need. So what does that mean, or what are some of the implications of that? We're going to see more corporates and more government-related corporates or entities in the Gulf looking to issue sukuk. So all this to say, there are various factors that are pushing issuance, and I think this year will be a strong year as well.
Obviously, one big sector of the conventional finance industry falls under the broad category of derivatives. Can any of you talk about what role derivatives have, if any, in Islamic finance? Mohammed?
I'm not an Islamic scholar, so I don't know how much can I talk about it. But the idea of uncertainty, which is basically the base for most derivatives, is forbidden in Islamic ideologies, and hence derivatives are not something that is allowed or even possible. Having said that, there are many efforts toward the creation of an Islamic hedge fund, let's say, probably something that will happen in the next year or two. Probably going to be very controversial in terms of who's going to accept it or who's not. If you look at the last, let's say, less than 10 years, 2006 and 7, many people have tried to come with structures to circumvent some of the forbiddens within the Islamic finance. And again, they have been controversial. Few people have probably accepted, and the majority did not accept it. And there are people who are trying to have different variations of that. At the moment, it's tough, very controversial, but time will tell. I believe actually one of my colleagues who used to be in IDB have even published a book about it. So, next 2 years.
Malaysian banks do issue some swaps where you can convert a floating variable rate to a fixed rate of income. But I agree. I mean, it's not necessarily. It's I'm not sure pushing the envelope is the right word, but it's not necessarily accepted by all scholars. Yeah.
I've lost track of time. Where are we on the? Plenty. Okay. I was just maybe I can just ask to see if are there any questions that anyone in the audience would like to ask at this juncture? Yes. Oh yeah. Just wait for the microphone.
I'm Yasser Al-Alawi from Bahrain Political Institute. I'm just wondering if you have made any kind of correlation or analysis of the growth speculations of the Islamic banking versus the stability of the Middle East systems, political systems, I mean.
I can try and take a stab at that, and maybe if we pull up the very first slide, which I think showed banking growth, and kind of answer the question from a couple different perspectives. I think when we look at the performance, and I'll speak here about both conventional Islamic, if we look at the performance of Gulf banks over the last, say last half a dozen years, and you could even go back a bit further. I mean, what are some of the salient characteristics and what has been the performance? You look at the characteristics, you've seen the well-capitalized, deposit funded, tend to follow a business model of sort of more or less vanilla banking. That's put them on a very good footing throughout the crisis. Now, the political environment, what has helped? We've seen over time, those petrodollars being recycled through the banks back into the economy. So definitely, I think the fiscal buffers that exist have been deployed to the benefit of the banking system, but one of the factors that have sort of underpinned or helped maintain stability of the banking system. And I think more specifically, if you look at Islamic finance banks, they've been growing at a far greater clip than conventional banks. You look at, I think on here shows Malaysia, UAE, Saudi, growing at about, the Islamic finance institutions are growing at double the rate of conventional banks, which is significant. And if you just look at credit growth, it's one of the leading indicators of potential stress in a banking system. But we have not seen that materialize in terms of bank failures. Why? Because we do have the significant capital buffers. Islamic banks tend to be very liquid, and they've maintained those strong liquidity positions throughout the crisis. So it's a very roundabout way of answering your question, but I think the political environment and the fiscal positions of the government have helped the banks, and the banks have maintained those solid metrics throughout the crisis. Yes, there has been pressure points, and we can kind of talk about what Islamic banks are exposed to and where the risks lie. But at a high level, I think there has been a significant amount of resilience.
If I may add to that as well, I believe it's going to even be more correlated. The way, or my point is, probably due to the relative instability in these countries, the first thing governments tend to do is spend more, obviously, in infrastructure, services, etc. Couple that with the lower oil prices, I mean, you're just putting more and more stress on the government, and hence the governments probably need the banks to step in, investing in infrastructure, among other things. Going back to the areas and the talk we just had, Islamic banks are relatively closer to infrastructure than conventional banks, at least in our region, because that's something that they thrive on. So I believe that's actually pushing the Islamic banking to even grow further, at least in the GCC, stronger and more alliance, cooperation, or whatever you want to call it, with the local governments.
Anything you want to add to that?
No.
Okay. Sure, here in the front. Yeah, just wait for the microphone.
Thanks very much. I'm from Canada, and I sit on the board of our Exim Bank, and we've done a green bond, one of the first green bonds, and also a dim sum bond, and now we're looking at some Islamic bonds. And I'm just wondering, what is the small p political or cultural pressure for demand for these products? I'm thinking, let's take the UAE as one of the largest, best-run sovereign wealth funds in the world, ADIA, 900, $1 billion. I'm sure a very small percentage of the sovereign wealth fund's investments are Sharia compliant or Islamic finance. Is there a trend amongst those large investors to want an Islamic Sharia compliant product, or is that really a non-factor? Is there any kind of demographic or cultural shift from the Gulf or even broader Islamic economies of an interest in this kind of product as it becomes more available?
If we talk specifically about sukuks, as Sean mentioned, the demand way outstrips supply. And that's another problem for suk investors. Liquidity is very low because, again, any investor in sukuks would be very hesitant trading them because once he sells, he can't replace them. So the demand is going to continue to be high for sukuks. If we're talking specifically about sukuk, I don't think that's going to be an issue at all for, years to come until probably supply catches with demand. And probably I'd like to touch upon a couple of points. Issuing sukuk, the only thing you're doing is just expanding your audience. During my tenure in one of my previous employers in the 90s, the early 2000s, we had an American oil drilling company issuing a sukuk. Family owned, somebody out of Texas with oil rigs who was convinced by the Merrill Lynch bankers at the time that issuing sukuk is going to be easier to sell, and it was sold in no time. So for an issuer, it's just, again, having more options between issuing a sukuk or a conventional bond. You're issuing at a lower price, as mentioned, and having a larger audience and people who are really hungry to have them. Probably even more stable investor base. These are not going to necessarily trade them, depending if you want people to trade your bonds or no. But definitely a more stable investor base.
The large sovereign funds, and they do have sukuk exposure. But I think one of the issues, and this kind of comes back to an earlier comment on, maybe we're not quite there as this being an attractive alternative for all asset managers, it is liquidity. Because, a lot of the banks, it's buy and hold. They'll get this and they're not trading. Look at the secondary markets, they tend to be quite shallow. One of the deepest secondary markets would be Malaysia, and I think it's the only one where it's over 100 billion in terms of secondary market debt that's out there. And even that, you kind of think about the relative size. You got Saudi after that. So it's not, you know, we're not quite at the level where you've got that active trading, easy to get in, easy to get out, which makes it attractive for your average fund. That being said, for an entity, you know, such as yourself, to issue high quality, highly rated paper, you know, sukuk, it'll be, you know, what we see again and again is, you know, oversubscriptions, a lot of demand, paper snatched up at very, very attractive yields for the issue. Yeah, there's a bit of a sunk cost there, but again, you know, it brings diversification in terms of your funding. That's one of the reasons why we see entities who, on the surface, you would say, oh, it's interesting that they're looking at issuing sukuk, but look at some of the underlying economics. You know, it is quite can be quite interesting.
In Malaysia, there are many Islamic funds set up specifically to invest in Islamic products, so they will certainly be natural subscribers. But all the funds will subscribe because you know, they'll just look at the fundamentals of your deal, and if the fundamentals are sound, then the fact whether Islamic or not is irrelevant. It will be snapped up. Issue in Malaysia, and it will be snapped up. But in terms of sovereign wealth funds, and Khazanah is a sovereign wealth fund for Malaysia, but we don't invest in fixed income. We are, however, issuers of sukuk. And one of the reasons we do that, again, is market development. So we started off issuing convertibles and exchangeables, and our most recent one, we just announced it, which is socially responsible, sorry, what's the word? Socially responsible instrument. Social impact bonds, that's right, social impact sukuk, and which we just announced we'll be issuing it in May, and again, you know, that's something to develop the market. It's not like we need the money, but it's a way of getting the market going. Yeah.
So just to close that,
yeah.
for a non-Islamic investor, he can't care less. It's an instrument which is highly rated, asset-backed or based. As long as the numbers are there, the demand's going to be there. They wouldn't. But for them, it's another instrument. Call it Islamic, call it social responsible, call it whatever you want to call it. It's an instrument that is in high demand.
Yeah, here on the right, the gentleman. Yeah.
Yeah, at the beginning you were highlighting the growth in the Islamic population, so it led me to believe it was a retail product. And then at the end, on the last question, it sounds like it's more of an institutional product. Is it an institutional product to develop retail products locally in the form of funds? So I guess that's a question. And then subject to that, I actually have a request for an illustration of one of these deals.
It's I mean, more or less commercial banking activities with different names and different structures. So if you look at the Islamic banks, they would have more or less most of the basic products that you'd have in a conventional bank. You'd have equivalents or substitutes for deposits. Now, that's a bit of a misconception, a tricky probably area to look at, because they're not necessarily all equivalent to deposits. You have the murabahas, the mudarabas, and the different forms of them. But you have all those. I mean, you have loans as well, probably with a difference in terms of usage. One of the shortcomings in the retail area is personal loans. You don't have an equivalent to a personal loan. But obviously, mortgages and all other types of loans are there.
That's not the question. The system is still working.
In terms of investable products?
The final end product, is it a retail investor-based distribution? Where does it trade on a primary issue? Where does it trade in the secondary market? Or is it institution? Is it something on an exchange that individuals can buy?
The sukuks themselves, you mean?
Yes.
Yeah, it's not, as of today, most of it's not a retail product. So you're talking about institutional investor base that's going to buy and tends to hold it. You look at sort of the Islamic finance sector as a whole, depends on how you sort of add things up. You're looking about sort of total assets about 1.5 to 2 trillion. About 80% of that is Islamic banking. So within Islamic banking, if you're an investor, a retail investor, there's an opportunity to get access, exposure to Islamic assets. But in terms of sukuk issuance, there's not really a retail market. And when we were talking about the secondary market, there is a secondary market, but it's not particularly deep. So that's, again, one of the obstacles or one of the limitations for conventional fund managers to look at this asset class. Is difficult to get in and out in terms of the liquidity.
Okay, so my last request, can you take a deal that you've taken to market, describe what the collateral is, what the structure was, and all the other nuances that would take that if we wanted to apply an asset-based product into, that we could put this all together outside of theory?
Sure. Actually, I think we've got a slide that speaks to that. Number 5. So, I mean, you can see here you've got the various steps. But what I'll just do is just sort of explain in sort of an intuitive way. So you've got an issuer. Say you've got a company. Let's take the example that was given before, because it'll be a good, easy example. You've got an oil company that wants to do a sukuk. So they have some underlying assets that they're going to use. In that case, do you have to remember what it was?
There were the offshore drilling.
Okay. So yeah, so you've got offshore drills, that physical assets that's going to generate cash flows, and there's going to be a certain risk related to those cash flows. So there'd be an SPV that would be, would be set up. There'd be a nominal transfer of that asset to the SPV. Could be a lease, could actually be a true sale as well. Depends on how it works. And essentially, the cash flows being generated by that, which would flow through the SPV to the investors, that's what would be equivalent to your coupon payment, would be the cash flows from that. But really, it's set up in such a way that that could be a nominal transfer. So at the end of the day, the investor is really taking exposure to that oil company in Texas, and its fundamental creditability to service that. So that unless it's truly a securitization, they probably don't have recourse at the end of the day to that rig, i.e. if there's a problem, can they actually step in and get their hands on it? Probably not. What they can get their hands on is a claim against the issuer. But it would be set up in such a way there would be an SPV. It's the SPV that's going to issue the sukuk. The SPV that could collect those cash flows and send those down to the investors. So I'm not sure if that answers your question, but that would be sort of a potential setup of a sukuk transaction. And it'd be done in such a manner that a Sharia board, Sharia scholars would sign off and say, okay, these steps have to be taken to ensure that there is some sort of transfer of the assets to a certain degree to make it Sharia compliant. But
are they all run through a rating agency process? So that dictates pricing, or is it?
Yeah, I mean, you could have. I mean, the large transactions tend to be rated by rating agencies, including Moody's. How we would look at it, we look at the legal structure. We look at sort of the complexities and any additional risk that Sharia compliance may add. But again, fundamentally, we're more looking at the credit story. What is the entity's capacity to service that debt, akin to any credit analysis that any investor would do on any bond, any fixed income instrument. So I think one of the important takeaways is there's a lot of structure and there can be on the surface a lot of complexity, but many of these transactions, ultimately, it's you're taking corporate risk of that entity, and that's why there's interest when someone issues, because you're interested in getting exposure to that corporate, to that sovereign.
Do you have a question? Yeah.
Hi, my name is Kelly Kaur. I work at BBVA Compass Bank in the Commercial Real Estate Lending Group. This past year, we did over $100 million in Sharia-compliant mortgages here in the U.S. I'm in New York. So what do you see the demand in the U.S. being for this type of product of the Sharia-compliant mortgage? And then also, what are the services that the U.S. needs to be able to support the demand coming from the Middle East to invest in the United States?
I don't know if I can speak on behalf of the U.S.
That's a great question. I didn't realize there was that much demand for Sharia-compliant mortgage. That's fantastic. Maybe we should, everyone should open an Islamic bank.
The investors are... The investors are from Dubai and Kuwait.
Okay, so basically
With
Middle
advisors
Eastern
in London.
investors wanting to have exposure to the real estate market, and the US similarly happened in Europe, where they need those services basically.
Right, and we find that they're investing in assets that have credit tenant leases that are for 20 years, and they're pretty much just want to clip coupons. There's not really much growth play. They just want to know that they're going to get that money back.
For the GCC players in that market, it's mainly the income stream. The real estate is probably one of the most favored probably asset classes within GCC investors. It comes as a second nature for them. They have always been investing in Europe at least, and obviously people have moved to the US in the last 10 years. So the demand will remain there. How much of it is Islamic? I probably can't necessarily say. I'm sure it's going to grow, but the base is still low.
I think one of the sort of the structural advantages that an institution like yours would have is that sort of targeting the Gulf countries. You look at the structure of their economies, you look at their currencies, you look at interest rates. There's obviously a mirror relationship with the United States to a certain degree. So strong appetite for U.S. dollar denominated assets, and there is a real strong demand out there and limited supply. So, for an entity to be able to get, exposure to an asset-backed security that's Sharia compliant in U.S. dollars, I think demand would be very, very strong. But in terms of your question was, if I understood correctly, is how to sort of increase the flows, or what do we think are sort of the obstacles to sort of growth in that market?
I would say the obstacles for those investors coming to the U.S., what are they looking for? What might hold them back from doing that type of transaction? Is it their expertise isn't there for the U.S. market? Do they need advisory services? Or do they have trouble finding money from lenders? Or
I think that probably the biggest issue would be going around taxation, so structuring. GCC investors obviously not taxes. There's no tax to start with. So yes, the asset class is highly in demand. Yes, being pegged to the US dollar makes it even easier for them. Given where interest rate is, having a yielding asset is something that is very attractive. So in my view, probably the biggest issue to go around is just taxation, understanding the tax system and how to go around it. Europe probably is an easier jurisdiction for GCC investors to go and invest in real estate. US is a bit of a more complicated jurisdiction.
thank you.
Thank you. Hi. Always better. So out of curiosity, my name's Adele Nazarian. I'm with Breitbart News. And I'm just wondering, out of curiosity, have any of you worked with either Iran or Saudi Arabia in terms of Islamic investments and banking? I'm just curious to know. Interesting. Thank you.
You certainly have.
Well, Iran probably not. With all the, I've been working in American and Swiss institutions. Iran have been obviously out for a very long time, but Saudi is obviously the biggest market in the GCC by far. I want to be a bit careful and politically correct talking about regulation, but Saudi investors obviously are among the biggest investors. They probably have a lot of demand going into the US and Europe, and probably they've been there for a very long time. It's not something new. It's just more apparent maybe these days. It becomes an institutional format rather than the private wealth that used to be there for a very long time. But I'm just trying to understand what's the issue there. It's just Saudi is probably one of the easiest. Saudi investors probably are going to be among the most venturous and among all investors.
Sunni versus Shia sort of purview of Islamic banking? Is there a difference there, or is it kind of just across the board Islamic all the way?
I mean, I think, look, there's Islamic finance and it's practiced globally. As we've talked about, there's certain movements to ensure that on the accounting side, on the regulatory side, we're moving towards sort of harmonization, standardization. We're not quite there yet, so there's still differences, as there are in terms of capital market authorities. You know, right now, if you look at traditional finance across countries, so are there differences? Yes, but there's definitely a move towards harmonization. And kind of coming back to your original question, you know, the Iranian market, obviously, you know, if sanctions were to be lifted, if there were to be a normalization of the financial services sector and how they interact with the rest of the world, that's a, you know, it's a huge market. I think banking assets, which are Sharia compliant in the country, I think it's about 450 billion US dollars. So it'd be, you know, it's huge. But I think right now, you know, there's limited interaction from the outside to Iran in terms of working on Sukuk, working on other transactions. For Saudi Arabia, I mean, it's a very strong market. In terms of US dollar issuances for Sukuk, it's the second biggest player after the UAE. There's sizable Islamic finance banks. I mean, I work for Moody's. We rate the large banks in Saudi, including the Islamic finance banks. So a very robust internal market and a lot of external demand for Saudi Sukuk issuances.
But if Iran just joined the international financial system, it would be a real spur to Islamic banking, because it's a very sophisticated economy, and we're not quite sure really I'm not quite sure personally what kind of Islamic banking has involved in Iran. But if we were to join the international financial system, then we'd all find out, and we'd be able to answer your question. Where there is such a big difference between... Yeah, no, I mean, it's a huge market, and you know, there are lots of business opportunities in Iran should they ever rejoin the financial system.
Are there any other questions? Yeah.
If anybody else wants to go first.
No, I think...
Maybe not.
Yeah.
So just in terms of the business market for it, in addition to Sukuks and those kind of bond-like products, why wouldn't there be more transactions done in a Sharia-compliant way that are sort of normal business transactions? I'll give two examples. Kingdom Holdings, Prince Awalid bought two of our Canadian major chains, Four Seasons Hotels and also Fairmont Hotels. So Fairmont he bought 100% of, and Four Seasons with Bill Gates and a couple other players. But they bought control of those companies. But none of those deals are done in any way that's Sharia compliant. Is there, because of tax reasons or some other impediment, that deals like that or larger real estate transactions won't be done using one of these Sharia compliant tools, and that's just not likely to, we're not going to see that in the next 10 years? What drives the kind of the decision of a major Middle East or Islamic investor to structure their transactions in an Islamic or Sharia compliant way? Sorry for the long question.
Probably those examples are not an example of a product, but rather structuring. And then entertainment and hospitality is not necessarily a major sector for Islamic investment. So structuring those two deals Islamically would be a bit of a challenge given the nature of those two existing institutions. Alcohol, you can't have that. Gambling, you can't have that, etc., etc., etc. So it's just due to the complexity of having those specific examples structured in a Sharia way. There are obviously Sharia investors who have been through other examples, and they obviously then they have to tweak it, play over 3 years, etc. But not necessarily in the two examples that you have mentioned.
Do you have anything you'd like to add to that?
No, I think that's absolutely right.
Well, I think we are right about near the end of our time. Do Sean, Sharon, Mohammed, do you have any final comments you want to make about anything we haven't touched on that you think is important to understand about the industry?
No, thank you all for joining. I don't have anything additional.
Okay. No, Islamic finance is growing, so I hope all of you learn something and will participate in more Islamic finance transactions. I
agree. More and more international banks are interested in the sector. They see the growth. They know that the growth is going to continue there. Regulation is going to just strengthen further and further, which obviously is going to mean more people are going to be encouraged to structure or to step into the area. And we'll see. I believe the next 5 to 6 years are going to be very interesting for the sector.
Good. Well, please join me in thanking all of our panelists, and thank you all for coming.